Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, I want to go over the toppiness in the charts. You can see a lot of coins are just having profits taken off of them. Sol down 9%, GMT down 8%, ICP down 7%, right? So a bunch of these coins are just being cashed out, people taking profits. Of course, we do have some interesting ones just popping off, like AVAX and Theta. Flow, of course. I don't personally remember what DCR is, but apparently that one's going. And, the rest of the market kind of red there. Everyone trying to skim a little bit off the top, probably in expectations of what might be coming up this week in terms of stocks probably taking profits, right? More than they did last Friday. And if we take a look at Bitcoin right now on the chart, we do seem to have this kind of diamond pattern right here which really could break up or down. I mean, it's also just kind of an indecision wedge, right? And so if we just pop on some structure here, let's just look at the overall structure. We would really need to claim some territory in this wedge to make it a little bit more of an accumulation here. And we don't want to fill it out too much so that we're making, some type of ascending triangle that then has a high likelihood of breaking to the downside. So it's a little bit it's a little bit off, I would say. I'm not 100% sure if this is going to end up working out to the upside, but on the downside, we are very close to a potential breakdown. And the reason I'm making this video is because I do have a little bit of a warning coming up here. So on the 4 hour, we are seeing extreme volatility, and of course, we did just a pop up right on the charts, and then we've kind of been working our way down. Since we had this major low right here when the Fed was talking, and so that major run up, right, that just kind of surprised everyone, really got the volatility in like a high level, and we've just been cooling off ever since. Cooling off. We've had some kind of fake outs, ups and downs, but we've basically been cooling off, cooling off. Now we're at ultra low volatility, and so that could suggest that we could have another pop up or another breakdown of a very serious magnitude. Depending on how the next couple 4 hour candles are closing and how perhaps stocks open Sunday night for the I think it's the Asian market. I forget how these markets actually open up on what timeline, which market opens first, but I believe it's Asia. And then to see how that they are trading and how the early week of the stock market trades, because stocks are getting incredibly toppy. And so, as we see different assets taking profits one by one, we're also seeing other assets just popping off, trying to, get a little bit extra that they can kind of squeeze out of the off the top there before ultimately they are going to have profits taken out of them also. And so everything, could just suddenly dump as well as it could just pop off. And thus we have this just maximally contracted volatility right here, right along the edge of this wedge, and then also this kind of indecisive wedge, this kind of a diamond like in the middle of it. And because that would have the ability to just break down, and we've already done it here, right? It's not like the bottom level of this triangle here is too secure or anything, but likewise we could pop up, through the top and just surprise everyone after poking around there so much. But really, what it's going to come down to is where is Bitcoin in its price action when this volatility decides to pop. Now, because that is like a 4 hour signal, it could take multiple sessions of 4 hours before it starts to, really start to show itself. So probably when the stock market starts to open is probably when that volatility is just going to pop, right? And the levels that I'm marking out here, just for your convenience, is 23,000, but let's call it 22,900. We could even say 22,800, just to be conservative, right? Basically, well, let's call it 900, okay? 22,900. If we break down from 22,900, when that high intensity volatility just pops off, then most likely we're going to be breaking to the downside. And likewise, the number for breaking to the upside is probably going to be around here at 23,300. If we have a nice 4 hour candle, couple candles, preferably sitting above 23,300, then maybe that volatility pop is going to take us perhaps even to the top of this wedge, or maybe even a breakout, as you do see that the last time that we had that signal was down here, and so we did pop all the way up to the top of this triangle, and so maybe that's just the limit of our move. But then again, it was a huge burst, and so a huge burst could clearly take us through it, perhaps even to 25,000, and then maybe we would be talking about a trend like this, right? Maybe something like that, as opposed to the teal triangle that I have. Maybe it's going to be one of these ascending triangles, and perhaps 25,000, maybe 25,200-ish could be a limitation before we get sent back down. That's only if we break to the upside. And the reason I'm suggesting these things is, again, we haven't had that type of a signal for quite some time. Back here on the 2nd, actually, is the last time that we had that signal. And you can see this is the 26th, so the second is actually all the way down here, right? So it's even, a couple skips before that, and so we had just had a massive move upwards when we had this, this blue signal popping off here on the 4 hour. Now, that doesn't mean that we haven't had low volatility since then. We had low volatility down here, just kind of in the middle of the range. And then we also had low volatility here, again, just kind of like in the middle of the range. And then we had low volatility here, just kind of like in the middle of this, I shouldn't say range, but rather the movement. And so really, I can't, just establish this as like a key moment that could be comparable to this. Really, this is the key moment, but I just want to show you how we are popping off of these signals, because the bottom of this actually aligns right with the EMA crossover on a low volatility move right here. And it's actually kind of a mid volatility, to be honest, but we did expand from there. That's the key point. And since we're starting out so low and so contracted, an expansion to the upside could potentially take us extremely low or extremely high, as you can see when we were at a maximum over here. And likewise, when we had a maximum, expansion that then contracted, we were all the way up here at, let's see, where did it cross over? Right about here-ish. Well, I guess this actually crossed over at the top of our range right here. So the top of our range was basically 24,000 on our volatility, and that took us all the way down to that 17,500. Okay, so we had a volatility flip basically as we were moving to the downside. We had low volatility. Again, these things are direction neutral. We expanded to the downside. We had a volatility flip, and then we contracted to the downside all the way to 17,500. And then essentially, ever since we contracted here, we kept contracting until we met a maximum contraction at this point, and then we were expanding all the way up until, let's see, the crossover was basically here at 24,000. just call it 24,000. And then we, of course, contracted down to 23,000. So this contraction range has really been shortened, but it doesn't mean that the power of this move, isn't good, because obviously this was a huge play, right? I mean, so if we had a play from that high to the low, it's about 10%, right? It's about 10%. And then if we talk about the move from the expansion, the contraction up here, to the bottom, obviously that was a 30% move. And then if we talk about it to this blue signal, that was a 20% move. So either way, we're talking about 10 to 30% moves that could potentially happen based upon these type of signals. And so definitely we want to pay attention when they're firing off. And we also want to pay attention on how our price action is oriented, because of course price action was oriented down here. It was oriented up, potentially to the upside on some of these other where these other signals were firing. And here, we're really going to probably want to have 23,300, or, if we could expect the downside, maybe under 22,900. This isn't a perfect science or anything like that, but basically, we will maintain our momentum above 23,300. So if we do get expansion, it's probably going to expand in the direction of our momentum. And if we lose our momentum, then if we have expansion, then we're probably going to be expanding to the downside as we lose that momentum, right? And so also we can see this on Ethereum's chart. While Ethereum doesn't have the same volatility as Bitcoin does, so it's not really even worth looking at on the 4 hour. Basically, we do have a similar type of kind of accumulation wedge going on here, which could have the possibility to pop to the upside. And in order for that to be validated, we need to hit this a level that I've basically marked out here, which would be, of course, 17,000. Pardon me, $1,735 approximately. If we get some 4 hour candles sitting on top of 1735, then probably Ethereum is going to go on a nice ride to the upside. If Ethereum loses 1600, let's just call it 70, so 1670, then probably you're going to explore, the kind of bottom of your range and that kind of thing, right? So that's what I've got for you guys. Hopefully that helps you make some decisions. Of course, right now we're just in the middle of the range, and so you don't have to take, a trade from every position on the chart. But obviously, if we do close a 4 hour candle above 1735, then you kind of have a play in your mind. And if we close a candle under 1670, then you kind of have a play in your mind to the downside, right? And just to reiterate, for Bitcoin, that's going to be, a 23,300 and a 22,900 for the potential downside. And again, like, the volatility is really independent of this price action, but in general, volatility does tend to move with your momentum. On average, sometimes it can just like wildly surprise you, but on average, it does move with your momentum. And so claiming a momentum to the upside or claiming momentum to the downside will be very important as this kind of rare signal, right, pops off. Because again, like, how often have we had this signal? Once. This was a high volatility. We can still count it. So once, twice, three times, four times in the entire last, basically 2 months, right? We've only had that signal four times in the last basically 2 months. And so, when it occurs, you should probably be paying attention. And that's on top of the signal that we have on the 8 hour, which has only happened twice in the last 2 months. And of course, that one has the potential to take us to the downside, has a much more higher statistical likelihood of taking us to the downside. But because the 8-hour signal takes longer to play out, what this is suggesting to me is that we could potentially have a 4-hour signal that kind of is a fake out, perhaps to the upside, and then perhaps the 8-hour signal takes us on a dump, or they could just both act together and reinforce each other, or it could be the other way around. But again, the momentum is probably going to determine a lot of this, and so you want to, capture the best momentum that you can for the 4-hour. And then the 8-hour, as we saw in my last video, does tend to have a fake out, right? A fake out move. So again, like the momentum may actually shift with these 8-hour moves, and I'm still analyzing that. But just to be on your toes, we've had a very nice couple of months here, guys. Like we've just had a really great growth of, what is this? A 40% move basically on Bitcoin. And for some of the altcoins, it's been like 100%, 150%. Some of them even have just gone crazy, parabolic. And so, as stocks are getting toppy, it's probably time to consider that we're at the top of a range that does have the possibility of exploring the bottom of the range if you don't get a clear breakout. And again, as long as Bitcoin is under 23,300, it's not clear which way it's going to move. And again, if it breaks below 22,900, probably it's going to explore the bottom of its range. And, you could even give it a little bit of leeway, to perhaps 22,600. We do have this wick here at 22,400. So maybe we find support there, but just wanted to give you a heads up on this type of a signal that's flashing not only on the 8 hours, which my last video was about, but also now I can see it quite clearly on the 4 hours, just firing off multiple times saying, hey, like I've got a lot of contracted volatility here. So maybe in a couple of 4-hour sessions, we're going to start getting some type of a move. You do see that when we had an ultimate low here, right, on the 4-hour, the 4-hour flash, and then we had an ultimate low, then we just ran up. Okay. And it didn't really work the same on the way down, but basically we basically hit a pretty good low here, and then we just had a massive run down. Okay, so again, it's direction neutral. We were in this blue zone, right? The red zone, also had us just contracting down, and also up here it had us contracting down, but sometimes it has us running up also, right? So here we had a high volatility starting right here. You can see it's kind of in the reddish zone, and then as it contracted down, we actually ran up right on this 4-hour. So again, it's direction neutral. You can't just determine it um, just by looking at the color. That's what kind of screws people up when they're looking at volatility. We also have to determine how our momentum is going, and then that increases the statistical likelihood of it moving in a certain direction. And so that's why I set those numbers that I did. Okay, guys, that's your alpha for the day. Stay safe and happy trading.